Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Sean Brodrick, senior editor at WeissGroup.com. Welcome back to the show, Sean.
Thanks very much for having me on.
Sean, gold is down. What's the reason behind that?
Okay, well, actually, gold started to fall on Monday, and that's because it's kind of a series of dominoes, which is Italy is working out a deal with Europe about its debt, and so that made the euro go higher, that made the dollar go lower, and that initially made gold go higher. But that gold rally failed, and that's kind of a signal, kind of an omen, that there isn't much to support gold underneath. So that actually made me think after that happened that gold might get weaker. And sure enough, today, what do we have? We had President Trump say that he was quite happy to slap more tariffs on China, and that makes people, or I should say investors in the market, worried that there's not much hope for the meeting that's coming at the end of the month between Xi and President Trump. That is the leader of China and President Trump. And so that really has made the U.S. dollar stronger because it's a harbor of safety. And as the U.S. dollar gets stronger, you know, that weakness in gold just really acted up, and we saw gold slide by nearly $10. And so that makes me think that, you know, maybe we'll have to see gold test 1,200 again, and it has been testing 1,200 successfully, but each test of that level saps a little strength from it. If it breaks through there, then it could go to 1189. However, we have seen people in the market come in and just buy gold and miners when gold gets down to 1,200. So that's the level that I would be keeping my eye on, because that's worked so far. Maybe that'll work again.
And of course, gold has, they say, an $1,100 platform for where they break even. And if they go below that, producers will just stop digging it out of the ground because they don't make any money.
Yeah, well, that depends on the individual producer. Some are still profitable at those levels. Some are not profitable now. I mean, if you want to look at not profitable, look at silver miners. Practically none of them are making money at current prices. It's really bordering on a crisis. We have silver nearing $14 an ounce. That is a terrible place for silver to be if you want to see silver miners make money. So, I mean, this means many silver miners are on sale, but we really need the price to go higher for anything to work out in this space.
People have talked about the gold-silver ratio in the past. What's the ratio now? I guess it's obvious what it is. But when will it come back to what they call normal, if ever?
Oh, yeah, but there is no normal anymore in that market, or at least not the way I look at it. I mean, there's just been so much going on that, I don't know. I'm not sure really what the gold market is looking for right now. Frankly, I thought that when Bitcoin and the other cryptocurrencies fell apart, that would send money heading back toward gold, because we saw that when money was flowing into cryptocurrencies, a lot of that money flowed out of the precious metals. And I really thought that with crypto under pressure, we would see gold supported. We did see that kind of happen, a little bit, but not nearly as much as you might think, considering the pressure that cryptos are like under. And speaking of the like silver gold ratio, it now takes 86 ounces of silver to buy 1 ounce of gold. That's just out of whack. That's completely out of whack. But what that speaks to is a lack of bullishness in the entire sector. Because if people were turning bullish on precious metals, then they would start to buy a lot more silver, because silver acts like gold on steroids. When gold goes up a little, silver just rips higher. When gold goes down, silver becomes a floor mat. And so we're in floor mat central right now. There is no bullishness in the sector. Now, if you're a contrarian, this is a good time to look at it, because definitely you could find some contrary plays in there right now. But if you're looking for things to go higher, there is no sign as yet that precious metals will go higher. So I would recommend looking at things that are working. There are things working quite well in this market, and there are some things that put in recent bottoms. Things like, say, solar energy, for example. I just started to move my subscribers into that. That's due to some good news out of China. Things like telecoms. But the last time you and I talked, we talked about safety stocks as a place where, money seems to be flowing. That continues. And so even though the market has these rather fierce sell-offs where lots of things go lower, when money does flow in, the safety stocks are really attracting it like a light bulb attract moths. You just see that money flowing right toward it.
Right, Sean. And we'll talk about those safety plays right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI, and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
Welcome back. We're speaking with Sean Brodrick. You were just mentioning some safety plays in a bumpy market where it seems to be an overall downturn, but nothing rapid. Where would you go?
Well, one thing people might keep in mind is that the fear of a trade war with China is increasing. So if you can find stocks that won't be that much adversely affected by a trade war, those are the things that will likely go higher in the months to come. I mean, assuming the stocks go sideways or else head higher, the things that should lead would be things like healthcare. Certain REITs would do very well. Dividend growers do well if they aren't really dependent on trade with China. Now, you might say at a certain level, everything's dependent on trade with China. Yeah, but there are things that are actually doing okay. One thing that I have in my subscribers' portfolios that's actually doing pretty well is Ford. And the reason that's doing so well is because other car makers are actually reporting problems. GM, for example, is not having a good time of it. Well, as things look worse for GM, investors start to figure, you know what, things look actually pretty good for Ford, and they pay a nice dividend. And so you can see money flow in a place like that. That's only one example. We have many others. But but one thing people should look at, and this is not a safety play, but it definitely seems to be something worth watching right now, is solar. And that's because Jinko Solar came out. That's a Chinese company, and they make solar modules for all over China. And now the Chinese government cut its subsidies for solar this past year. Everybody thought that, that would really hurt the market. It hasn't hurt the market at all. In fact, Jinko Solar reported a profit when many people were expecting it to lose money. And they say that the markets in China for solar is actually holding up quite well, and they expect it to do even better next year. And so, that shows you there are pockets of strength in this global market, and that's why we're seeing the solar stocks perform so well. They've had a couple good days, but I think they could go a lot longer. So I'm starting to recommend my subscribers move into that. I think there's more potential there. And also look at the telecoms. Why look at the telecoms? Because no matter what happens with a trade war, people need to talk on the phone. So that means that maybe the telecoms aren't completely immune to a downturn, but they'll actually hold out pretty well. And some of them pay very nice dividends to boot. So, you put those things together, there are pockets of strength in this market where you could do very well. And I will give a shout out to uranium because it has been, we've seen not the price of uranium go lower so much. It has pulled back a little bit, but we've seen uranium miners, uranium stocks pulled back quite a bit as a lot of optimism came out of that market. Well, now they're on sale. And so as the price of the underlying metal keeps going higher, that means these things look like bargains. And so I expect to start my own bargain hunting in that industry very soon.
We'll have more with Sean Brodrick right after this.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Sean Brodrick. Sean, the Wall Street Journal reports that President Trump has said he believes consumers could afford a 10% tariff on iPhones. Can they afford $120 more on the price of a very pricey telephone to start with?
Well, it depends on who has to eat that. I mean, consumers could get some of it, though frankly most analysts say that they're kind of reaching the upper limit of what most people can actually pay for an iPhone. Apple makes plenty of profits. They could eat some of that too. And the Chinese manufacturers could absorb some of the cost. So I don't think that the extra cost will go to any one place. It'll be split among them. It'll be interesting to see how that split works out. I do think Apple was sold off hard. It really should only be sold off this hard if you don't think there's much hope of working out a trade deal with China. Now, that may be the case. And in which case, it'll go lower. But if you think there is a possibility that a trade deal is going to be worked out, now's your best chance to buy Apple in quite a long time.
Crude oil seems to be on a rapid plunge downwards. Is that going to continue?
Well, don't we all wish we knew the answer to that one? I am starting to see some strength in some oil names, which tells me that investors are thinking we're at a bottom. And boy, was that a precipitous drop. Things went down so fast. There is an OPEC meeting coming up. And what we've seen in the past month is we have seen Saudi Arabia crank up its production to record levels, as in all-time record levels, 11.9 million barrels. That stuff tells me that they are laying down a marker for that OPEC meeting, showing the other members of OPEC who the big dog is. They want to go in there and say, look, we can outperform, outproduce all of you. You have to come to a deal with us. I personally am looking for a cut at the next OPEC meeting, and it'll probably be a percentage cut, and that's one more reason why Saudi Arabia is producing so much now. So when it cuts as a percentage, it won't be so bad. But I expect that from the OPEC meeting, and that's probably the next place we'll see prices really turn around, or it could be in anticipation of that at the OPEC meeting if word starts to leak out about it.
Sean, interest rates, is the Fed going to continue its plan to raise rates continually every 3 or 4 months, or are they going to start putting the brakes to it?
It sure looks that way. In fact, that is one of the things kicking gold down a slippery slope right now and I forgot to mention that in our earlier segment, so I'm glad you brought that up. But one of the Fed governors just spoke, and the general impression he gave is that, and this is Federal Reserve Vice Chairman Richard Clarida, the general impression he gave is that he's fine with the current pace of raising rates. What many people were expecting and, let's say, hoping would happen is that he might indicate that they wouldn't keep raising on such a regular basis. There was no indication of that whatsoever. Now, I've heard people try to reinterpret the tea leaves after this, but that's basically what happened. So you can take it however you want it. How the market took it is that we should keep having strength in the U.S. dollar as those rate hikes go forward, and that was one more thing, therefore, that weighed on gold. Now, there are more Fed governors who are going to speak ahead of their next meeting. Maybe one of them will start to cast doubt on these rate hikes. I don't know. I do know that it's hard to be an export-driven economy when your currency is so darn strong. That's one thing the U.S. has to think about. And it's hard to, attract factories from overseas to come and build in the U.S. when the currency is so strong. They just aren't going to do that. So, if the Trump administration, wants to have more wants to have more exports, wants to have more factories relocate to the U.S. or at least stay in the U.S., it has to do something about the strengthening currency. That's why you're starting to see this spat between President Trump and the Fed, because he wants them to stop hiking. They are not taking the hint so far, and so far, we are going to see a stronger dollar.
Again, rumors that President Trump might impose tariffs on European car imports. Is that in reaction to GM having to close plants in Canada and the U.S.? Yeah,
that was just kind of an outburst from him. There hasn't been any follow-through. We'll have to see what happens. Again, that's good for Ford. So, I'm glad I have my subscribers in Ford. There are winners and losers from that, but until you see an actual statement of policy from the Trump administration, you don't want to put too much faith into it. Sometimes he just tweets things out and he forgets them, as many of us do. But his words happen to carry more weight because he's the president. So, I wouldn't actually focus on that too much unless we see an actual policy statement from the White House on it.
Sean, thank you so much for chatting with us.
Thanks. It's always a great pleasure.
Sean, by the way, reminder, other websites that you have where people can get advice?
Sure. EdelsonInstitute.com has my free column 3 times a week, or else you can check out Wealth Supercycle. That's my monthly newsletter, and we're having some great success in that.
Thanks again, Sean.
Thank you.
My guest has been Sean Brodrick, Senior Editor at WeissGroup.com. You're listening to HowStreet.com Radio. Find us on Twitter at HowStreet. Our popular YouTube channel is Talk Digital Network. Questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.